What is going on, guys? What is going on, guys? Let me know if you can hear me. Good morning. Good to see you. Good evening or afternoon if you're on the other side of the world. Let me just send a quick update in the announcements that I'm going live. I'm live now. And we are going to see what Papa J. Powell has to say and see what that means for the markets. Click here. But yeah, let me know if the mic volume is good. All right. Let me go to the screen. What is going on, guys? Oh, yes, and of course, I should say, you guys already noticed. You see the donate button. All live streams going forward are going to be donated to the St. Jude's Children's Hospital. We raised $950 so far. That is amazing. Yeah. What's up, Kenan? How are you doing, man? Randy, what's going on? Duke, Jed, what's going on? Doc, Yash, Mariano, what's going on? You are late. You know what? You can blame the coffee. Blame the coffee. It took a while to make this morning, so yeah. But I'm here now. All right, let's see what Papa J. Powell is saying. Oh, and let me know if the volume on the Fed live stream is good. Obviously, you see the markets ripping today. This is why we closed the VIX hedge yesterday. As I was saying, you want to make those things very short term. The VIX tends to spike and tank within, from day to day. So, all right. Hello, new to traveling trader. So hype. What's up? What's up, Z? What's going on? Starksy. What's going on? All right. With weak Biden pullout game in Kabul, infrastructure bill in discussion, debt ceiling going up, Powell will do nothing reckless. You know what? Might be the truth. However, the inflation rate right now climbs to 4.2%, which is double what they're expecting. So we might hear some talks about a potential rate hike. And I've seen some contrarian analysts saying, don't be surprised if he actually does this. Announces a rate hike or gives an indication that the rate hike is coming sooner than expected. But let's see what actually it's not that. Let's see what
and those in medical research, business, and government who came together to discover, produce, and widely distribute effective vaccines in record time.
Tell me if the volume on the live stream is good or if it's too loud.
As well as their loved ones. Strong policy support has fueled a vigorous but uneven recovery, one that is, in many respects, historically anomalous. In a reversal of typical patterns in a downturn, aggregate personal income rose rather than fell, and households massively shifted their spending from services to manufactured goods. Booming demand for goods and the strength and speed of the reopening have led to shortages and bottlenecks, leaving the COVID-constrained supply side unable to keep up. The result has been elevated inflation in durable goods, a sector that has experienced an annual inflation rate well below zero over the past quarter century. Labor market conditions are improving but turbulent, and the pandemic continues to threaten not only health and life, but also economic activity. Many other advanced economies are experiencing similarly unusual conditions. In my comments today, I will focus on the Fed's efforts to promote our maximum employment and price stability goals amid this upheaval, and suggest how lessons from history and a careful focus on incoming data and the evolving risks offer useful guidance for today's unique monetary policy challenges. The pandemic recession, the briefest yet deepest on record, displaced roughly 30 million workers in the space of 2 months. The decline in output in the second quarter of 2020 was twice the full decline during the Great Recession. But the pace of the recovery has exceeded expectations, with output surpassing its previous peak after only 4 quarters, less than half the time required following the Great Recession. As is typically the case, the recovery in employment has lagged that in output. Nonetheless, employment gains have also come faster than expected. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. The unevenness of the recovery can further be seen through the lens of the sectoral shift of spending into goods, particularly durable goods such as appliances, furniture, and cars, and away from services, particularly in-person services in areas such as travel and leisure. As the pandemic struck, restaurant meals fell 45%, air travel 95%, and dentist visits 65%. Even today, with overall GDP and consumption spending more than fully recovered, services spending remains about 7% below trend. Total employment is now 6 million below its February 2020 level, and 5 million of that shortfall is in the still depressed service sector. In contrast, spending on durable goods has boomed since the start of the recovery and is now running about 20% above the pre-pandemic level. With demand outstripping pandemic-afflicted supply, rising durables prices are a principal factor lifting inflation well above our 2% objective. Given the ongoing upheaval in the economy, some strains and surprises are inevitable. The job of monetary policy is to promote maximum employment and price stability as the economy works through this challenging period. I'll turn now to a discussion of progress toward those goals. The outlook for the labor market has brightened considerably in recent months. After faltering last winter, job gains have risen steadily over the course of this year and now average 832,000 over the past 3 months, of which almost 800,000 have been in services. The pace of total hiring is faster than at any time in the recorded data before the pandemic. The levels of job openings and quits are at record highs, and employers report that they cannot fill jobs fast enough to meet returning demand. These favorable conditions for job seekers should help the economy cover the considerable remaining ground to reach maximum employment. The unemployment rate has declined to 5.4%, a post-pandemic low, but is still much too high, and the reported rate understates the amount of labor market slack. Long-term unemployment remains elevated, and the recovery in labor force participation has lagged well behind the rest of the labor market, as it has in past recoveries. With vaccinations rising, schools reopening, and enhanced unemployment benefits ending, some factors that may be holding back job seekers are likely fading. While the Delta variant presents a near-term risk, the prospects are good for continued progress toward maximum employment. The rapid reopening of the economy has brought a sharp run-up in inflation. Over the 12 months through July, measures of headline and core PCE inflation have run at 4.2% and 3.6% respectively, well above our 2% longer run objective. Businesses and consumers widely report upward pressure on prices and wages. Inflation at these levels is, of course, a cause for concern. But that concern is tempered by a number of factors that suggest that these elevated readings are likely to prove temporary. This assessment is a critical and ongoing one.
So he's saying the same thing about inflation, that inflation is transitory, blah, 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 blah. So I think that that's a precursor to him not raising rates. But I also want to hear what they say about tapering.
Inflation is so far largely the product of a relatively narrow group of goods and services that have been directly affected by the pandemic and the reopening of the economy. Durable goods alone contributed about 1% to the latest 12-month measures of headline and core inflation. Energy prices, which rebounded with the strong recovery, added another 0.8% to headline inflation. And from long experience, we expect the inflation effects of these increases to be transitory. In addition, some prices, for example, for hotel rooms and airplane tickets, declined sharply during the recession and have now moved back up close to pre-pandemic levels. The 12-month window we use in computing inflation now captures the rebound in prices, but not the initial decline, temporarily elevating reported inflation. These effects, which are adding a few tenths to measured inflation, should wash out over time. We consult a range of measures meant to capture whether price increases for particular items are spilling over into broad-based inflation. These include trimmed mean measures and measures excluding durables and computed from just before the pandemic. These measures generally show inflation at or close to our 2% longer-run objective. We would be concerned at signs that inflationary pressures were spreading more broadly through the economy. We are also directly monitoring the prices of particular goods and services most affected by the pandemic and the reopening, and are beginning to see a moderation in some cases as shortages ease. Used car prices, for example, appear to have stabilized. Indeed, some price indicators are beginning to fall. If that continues, as many analysts predict, then used car prices will soon be pulling measured inflation down, as they did for much of the past decade. This same dynamic of upward inflation pressure dissipating and in some cases reversing seems likely to play out in durables more generally. Over the 25 years preceding the pandemic, durables prices actually declined, with inflation averaging negative 1.9% per year. As supply problems have begun to resolve, inflation in durable goods other than autos has now slowed and may be starting to fall. It seems unlikely that durables inflation will continue to contribute importantly over time to overall inflation. We will be looking for evidence that supports or undercuts that expectation. We also assess whether wage increases are consistent with our 2% inflation goal over time. Wage increases are essential to support a rising standard of living and are generally, of course, a welcome development. But if wage increases were to move materially and persistently above the levels of productivity gains and inflation, businesses would likely pass those increases on to customers, a process that could become the sort of wage price spiral seen at times in the past. Today, we see little evidence of wage increases that might threaten excessive inflation. Broad-based measures of wages that adjust for compositional changes in the labor force, such as the Employment Cost Index and the Atlanta Wage Growth Tracker, show wages moving up at a pace that appears consistent with our longer-term inflation objective. We will continue to monitor this carefully. Policymakers and analysts generally believe.
All right, so I found, I don't know if the video is a bit delayed, but obviously he was talking about inflation being temporary and transitory. However, the article just came out on MarketWatch talking about tapering, says that he was careful not to include a timeline for when the Fed would start tapering, right? So he's once again being vague. He says that he supports tapering or a slowdown of the pace of its bond purchases by sometime this year, which is in line with what they've been saying the whole time, is that they will revisit it towards the end of the year. And even then, they probably won't institute a very aggressive taper right away. If you guys want me to explain what tapering is, if you want me to explain why the Fed purchases assets, let me know in the chat, and I will be happy to do so. Let me go back to the chat actually, and I'll be happy to do so. So let me know. Let me know. Let me see. I think I missed a bunch of messages. Guys, we're over 1,000. Thank you so much for the donations. And if you want, Dragos, thank you so much for your donation. If you want to get your question answered, Dragos says wanted to see a round number. If you want to get your question answered instead of super chatting, because I can't have the super chat and the donate button at the same time, I thought they would have both. They used to have both, and according to what I was reading, and you would be able to, donate your super chats as well. However, right now you only have the donate button. So leave your question, right after you donate, leave your question right below, and I'll take it. So, all right. If you guys want to continue watching the Fed speech, let me know. But I think the summary is that, inflation is transitory, that yes, the inflation rate is hovering around 4%, which is double what they wanted. However, Powell said that one, this is temporary, and two, it only applies to a very small number or a very small range of goods and isn't really a broad-based inflation number. So he mentioned used cars, for instance. But he's saying that real inflation is still hovering around what they expect. Whether that's true or not, I don't think anybody knows. And that he doesn't support, or that he supports a slowdown and some form of tapering towards the end of the year, but not committing to anything now. So largely unchanged. And if we take a look at the markets, I do think that you could see that reflected in the indices, right? The indices are actually higher than when they opened. So, the market is accepting what he is saying. If you guys, again, if you want me to continue, if you want to hear him talk with that shitty audio, let me know. And I'll be happy to turn back the audio. Otherwise, we can continue to your guys' questions. And if you have any, if you have any sort of these really are ask me anything types of sessions. So you can ask me anything, and if you're stuck on anything or you want my opinion on something, let me know, and I'll be sure to answer it for you. So yeah. Matthew DeVito donated 20. Thank you so much. Ali donated 50. Thank you so much. What's going on, Ali? How you doing? Long time no see. But yeah, let me, again, if you guys want to use the donate button as the super chat, let me know, and put your question in right after your donation, and I will get to it for sure. Juan Jose Honores says, what does mean taper? All right, so I'm going to close this real quick. Again, if you want me to go back to Papa J. Powell, if you have a fetish for seeing him on TV or something, let me know, and I'll go back to the live stream. However, so tapering basically means that what the Fed actually does, right, is that they are purchasing treasuries and mortgage-backed securities. They're purchasing assets, right? They're dumping money into the treasury market. And the reason that they do that is for a couple of reasons. But one, they try to suppress the treasury yields, the interest rates on the treasuries. And why do they do that? Well, one, they want to make the treasury market less attractive. That way, if you're an investor, that's why we're all investing in the stock market, right? Like right now, when you have a chunk of money, you're not thinking, oh, let me buy some treasury yields or some treasury bonds at a 1% yield. You're thinking, oh man, there's still a lot of gains to be made in the stock market. Let me go over here and put my money there, right? So it props up the stock market, but also banks and institutions use the 10-year treasury as a benchmark for interest rates. So if they keep the interest rates low, then that means that oh my God, I lost my train of thought. So yeah, they basically try to suppress the interest rates, right? And that way, because if the interest rate is high, right, that takes money out of the economy. Because the higher that the interest rate is, right, then investors and consumers will be more likely to actually save their money or invest their money, right, in savings accounts, CDs, etc., different type of low risk assets, as opposed to spending, right? That's why when interest rates are low, people are more inclined to spend, thereby boosting the economy. So that's why they actually do large asset purchases during times of recession, et cetera. This really started as a result of the financial crisis in 2008. So tapering means a slowdown of those asset purchases, right? And when the Fed slows down those asset purchases, then you are expecting interest rates to go up immediately. And when interest rates go up immediately, again, then people are more inclined to invest in these low risk assets and not invest as much in riskier assets like the stock market. They are also less likely to spend money in the economy because now they're like, oh, there's an incentive to save. I can get 3% or whatever if I purchase this low risk asset as opposed to spending money on iPads and cars and whatnot. So that's what tapering means. All right. AMD on the move again. We'll take a look at AMD if you guys want. If you guys want any ticker symbols, let me know. Papa Powell Fetish Club is trending. Ant-Man donated. Thank you, Ant-Man. Thank you so much for your donation. Big time fetish, Jenny does. You know what's funny is I've actually heard like some of my female friends talk about Jay Powell in that regard. We won't get into that though. How do you feel on China stocks? All right. So look, they're obviously every few years we tend to see this China FUD, right? However, it is you can see the VIX dropping now as the market is absorbing what Jay Powell is saying really well. But every few years you see this China FUD. And the reason is because their government has a huge say in what goes on in their markets, okay? So, and they use that as a strategic negotiating tool when negotiating with the other world superpowers, specifically the United States. So they devalue their currency when it's beneficial to them. They boost certain companies when it's beneficial to them. They suppress certain companies when it's beneficial to them. And that causes instability. That is why I say, you know, if you are going to invest in the Chinese market, you know, make sure that it's for a very small percentage of your portfolio. At least that is my opinion. Obviously, you're going to do what you want. I know people that actually stay away from the Chinese market as a whole. However, yes, if you can stomach the volatility, there is definitely money to be made. As I said in 2015, the Chinese market was at a low, right? It looked like a bear market in China. However, you know, if it has risen since then. And then obviously after COVID, it tanked and then it rode up with the American stock market. And now due to its policies, we are seeing it tank again. So it is definitely way more volatile than the American stock market. However, if you can catch a low or what looks to be a low based on the chart, I don't mind putting in, you know, some money in FXI, which is the China large cap ETF, or KWEB, which is the China internet ETF. However, I'm not a huge proponent of investing large amounts of money in China. I do think there are emerging markets as well as the European market where you can invest a little more safely. Now, I do think there are certain stocks like NIO, which are advantageous to invest in because they are currently propped up by the Chinese government. There's an incentive for the Chinese government to prop up NIO because, you know, it sees Tesla as the gold standard, you know, so far at least, worldwide in terms of luxury EVs, and it wants a luxury EV manufacturer of its own. And I think that eventually they are going to suppress Tesla's market share in China once they can get some of these EVs off the ground and they can get some of these local EVs in China to scale and to outpace Tesla, right? So I do think that at least as of now, based on the current market conditions, there's an incentive to invest in NIO. But yeah, I don't know that, you know, large scale purchases in the Chinese market is advantageous to you. Let me close this because it is causing a slowdown. All right. We talked about tapering. No tapering date, bullish sentiment. Yes, exactly. No tapering date, bullish sentiment. Sell VIX calls. No, you don't want to sell VIX calls. You want to sell VIX puts. When you sell calls, you are actually bearish, meaning that you expect the VIX to go down. When you sell VIX puts, then you're expecting the VIX to go up. So what I was talking about in one of my videos that I got a lot of requests to make a VIX hedging video, I was saying that you can go long if you wanted to go long on the SPY, right? But obviously the S&P just made a new all-time high today, which is insane. I don't know. I lost track of how many records this year the index has made, right? I think it's a record number of records. Wow, that's like inception level data points right there. But the S&P made a new all-time high today, right? So if you were to buy the S&P right now, a way to hedge against the S&P dropping because you came in at the high, a way to hedge against that is to then sell puts on the VIX, right? So the VIX right now, is tanking because the market is exuberant, right? So usually when the market goes up, the VIX drops. You would sell puts, so you could sell like the $16 put on the VIX while going long on the SPY. That way, if the S&P drops and the VIX goes up, you make money on those SPY puts. Now, if the SPY doesn't fall below your strike, then you keep the money that you sold the put for, right? So that is a hedging strategy. Now, the only thing is you won't get a ton of money for selling the VIX puts, but you will get something back. A lot of people do like to buy calls against the VIX, which is a little more riskier because you're actually spending money to buy VIX calls, as opposed to when you're selling the put, you were getting money for selling those puts. So hopefully that makes sense. All right, Ant-Man, blah blah blah. Let me see if I missed any questions. All right, so Ant-Man donated and said, have a look at SoFi, please. Okay. And then he also said difference between selling a VIX put and buying a VIX call. Oh, I just outlined it, right? You have less money to make by selling a VIX put, but you are selling it, so you are getting money for it, versus buying a VIX call, which you are paying for, right? So, and for those of you that are just tuning in, if you want a summary of what Jay Powell just said, basically, he's probably still talking, but basically what he said was no reason to raise interest rates because the inflation rate is transitory, meaning temporary, and it is only isolated to a small range of goods. And we will likely see some tapering towards the end of the year. It's going to be a slow tapering, but we'll talk about it later. So he was basically vague on it, hasn't really changed his tune, so hasn't really said anything that is revelatory there. But Adman said, take a look at SoFi. All right, let's take a look at SoFi. Yeah, I mean, I've talked about this before, but SoFi is just sitting here at support. I said in one of my last videos that SoFi can easily be a stock where if you buy it, at $14, I would not be surprised to see it drop to say $9 or whatever, kind of like 23andMe. The reason is because it really disappointed on earnings. As I said, it was expected to come in at a loss of 6% earnings per share, minus 0.06 or minus 6 cents EPS. And it came in at minus almost 50 cents EPS, right? So 8 times worse than expected. I do think it has a bright future because it is growing its user base. So the number of users is growing, as well as the ARPU, which is basically the revenue per user generated, is also growing. However, I think that it is going to have to at least the next earnings round, it is going to have to prove to the market that it has what it takes to climb out of the slump here. So I can easily see SoFi keep dropping, especially after forming this head and shoulders here. I can easily see it keep dropping. And I don't mind selling puts on SoFi. So if you sold like the $12 or maybe the $10 cash secured put on SoFi, I don't mind that. But it is still risky until it proves to the market that, hey, we can actually climb out of this hole here in the future. It doesn't have to climb out of the hole on the next earnings. That's not what I'm saying, but it has to give an indication to the market that, hey, we can actually be profitable in the long run, and here's why, right? And provide some guidance. Otherwise, I mean, you're dealing with a risky company that is right now acting like pretty much a falling knife, right? There's no reason for stocks to go up if the stock doesn't give an indication to the market that it can actually be profitable at some point in the future, right? It does not have to be profitable today. I think Amazon, like 10 years running, didn't record a profit. Same as Tesla, right? I think on the 10th year was the first time that Tesla recorded a profit. So, but it gave an indication to the market that, hey, we are scaling. And at some point, if we continue to scale and interest in our products continues to grow, then we will be profitable. SoFi is still a very infant company and is not able to show that yet. And until that happens, I don't really care to invest in something like this, right? Like I could put my money elsewhere. Being obsessed with a ticker symbol just because you're in it, I in my view, that you remove the objectivity from investing when you do that, right? Aunt T says, did he say raise rates? No. No, he didn't. He actually said the opposite. He said there's no reason to raise rates because inflation is transitory. Did I miss any donations? I don't think so. Oh, Justin Thompson, thank you so much. Let me see if you left if you left a question. If not, yeah, guys, when you leave your donations, you can leave a question and I will get to those first. Lewis says, morning, Zay. Hey, what's going on? Let me see. All right, Justin did not leave a question, but thank you for the donation. All right, buy call or sell puts. I have no idea what you were talking about, novice gamer. No idea what ticker you're talking about. Interest rates need to go up. They will go up, obviously, but not this year. Not this year. They will likely go up next year or the year after. If you're talking about treasury yields, that's different from the Fed rate, right? So you have the Fed rate and then you have treasury yields. The treasury yields go up in response to what is going on in the treasury market. The Fed rate goes up, the Fed interest rate goes up when the Federal Reserve says they're going to go up, right? So they set the Fed rate, but the treasury yields are variable. They go up and down on a daily basis based on what's going on in the treasury market. When people buy treasuries, then the Fed rate goes down. When people are selling their treasuries, then the Fed rate goes up. Or not the Fed rate, sorry, the treasury yield goes up. All right. Do NEO have a upside down head and shoulders, which is very bullish pattern? I wouldn't call it a very bullish pattern. And no, it doesn't have an upside down. You're talking about a reverse head and shoulders? No, it could have a potential inverse head and shoulders, right? So here's, if this is the left shoulder and this is the head, it could create a right shoulder, but it's too premature here to tell, right? So no, it doesn't. All right. Is the Nvidia good buy at all-time high right now? Is anything a good buy at all-time high? The answer is probably no. What is your favorite option strategy that you use to generate monthly income? Actually, weekly income, but there's two that I mainly use. This is a good question, Jay Stearns. There's two that I mainly use, right? One is trading spreads. Now, the most common traded spread is probably a vertical spread, right? But if you're on the Discord, you'll know that we trade, especially around earnings, we trade diagonals and calendars a lot too. So, those are more advanced than vertical spreads. I would say start with vertical spreads. There's no reason for you to get into diagonals and calendars if you don't understand vertical spreads first, right? So when you first get into options, you're probably just buying calls, which I never do. I did a whole video on that. Search the traveling trader call options. You'll see why I don't buy calls unless I feel like gambling, right? But the step up from that, like once you graduate from buying calls, the next step up is vertical spreads. So learn vertical spreads, Google it, whatever. I also have an options course, but obviously you can learn this stuff for free if you want to. If you want to take the options course, that link is also in the description. But vertical spreads, right? So that is one. And the other one is selling cash secured puts. Now you are going to need a margin account most likely to sell cash secured puts. And you're going to need a relatively large bankroll if you are going to do this on expensive stocks like Tesla or Amazon or Nvidia or whatever. If you do it, you could still do it on, if you want to practice, you could do it on cheaper stocks. So like NEO is a great example. If you're bullish on NEO and NEO currently sitting here at support at 38, you could sell like the 35 cash secured put on NEO, right? So if we go to NEO here, you can sell, let's see, if you go to, and the longer you go out, the more money you get for your put. But let's just say that you're bullish on NEO and you go to December 17th. Let's just say that you sell the $40 put on NEO. You could sell it right now for $600, right? Or $6. That means that if NEO drops below $40 by December 17th and you get assigned, you are obligated to buy 100 shares of NEO at $34, which is $40 minus 6, right? So $34 a share, which is at a major discount from where it's at currently, because currently it's trading at $38 a share. So if you got a sign on that put, you would essentially be buying NEO at a 10% discount, right? Or a little over 10% discount, which is great. If you don't get a sign on that put, and if NEO's above $40 by December 17th, then you keep $600 per contract that you sold, right? Because remember, we sold this for $600. So cash secure puts is a very lucrative way of generating income. I always say this, fun fact, I sell a cash secure put on Tesla every single week, and I've never been assigned in over 2 years, okay? Especially when Tesla falls below the $600 mark. That $450 put on Tesla is so lucrative because it pays, it could pay anywhere between $1,000 and $2,000 per put. But again, you do need a relatively large bankroll because the exchange or the platform is going to make sure that you have the money, or at least the margin, in order to buy 100 shares of that stock at that strike price. Okay, so start with something that's cheaper, like a NEO or like a SoFi maybe, but make sure that you're only selling puts on stocks that you want to own. You don't sell puts on stocks that you don't want to own. I see this mistake happen all the time, that people sell puts on stocks and they're like, oh, I don't really want to get assigned. Well, don't sell a put then. Use another strategy, right? Sell a put spread, for instance, right? If all you're doing is speculating on the price and you think the price has found a bottom, but you don't really want to own the shares, then you could sell a put vertical spread, right? Which is also called a put credit spread or a bull put spread. So again, look up vertical spreads, do your reading, paper trade, etc. You could paper trade on Webull or Thinkorswim. You cannot paper trade on Robinhood, unfortunately. But Thinkorswim, you can open up an account, fund it with $0, and you can use Thinkorswim for free. So, you have all the resources at your disposal. There's no excuse for not paper trading, in my view. Are the banks still good for when the Fed does start to taper? Yes. So when interest rates go up, that is good for banks. Whether we're talking about the Fed rate or we're talking about the Treasury yields, okay? All right. Did I miss a donation? Let me go back and look. And guys, let me know if I did. Justin Thompson. Okay, that's the last one that I got. Led Zepp. This was expected. Powell has been really clear that he will not start tapering until the data tells him he should. Yeah. For the most part, yes. I agree with you. However, I think that it will come. I mean, so far Powell has been rather vague but transparent, right? Like he's been consistent, but he has been vague. And my experience with the Fed announcements is there will come a time when the Fed announces something unexpectedly, right? That's just been the history of the Fed. Now, Powell could be entirely different. He could tell you, give you a lot of fair warnings before something is announced. But there will come a time, in my view, that the Fed will announce something that the market, did not expect. This is just the nature of these announcements. So even if he says, we are going to raise the rate on this date, and this date is a year or two out, the market is still going to price in that news now because it's known that it's coming, right? So it is my view that there will come a time when the Fed does something that's unexpected. So just be on the lookout for that. However, I agree with you for the most part. Let's see. Are the banks? I answered that question. Let me see. Did we get Mark G donated $20. Thank you so much, Mark. If you have a question, there you go. Did you sell the 12.5 put on PTRA, and how do you feel about it now? Yeah, I sold the 12.5 put on PTRA, which is Proterra. Same way. I feel that Proterra could, in the long term, this is the EV bus company, right? I do think that after the infrastructure bill is actually passed, that stocks like Proterra could see a nice little bump. But I sold the 12.5 put. My cost basis would be around $10 where it's trading now. So I don't mind, getting a sign on this, or you can keep rolling the put, right? You can keep rolling the short put out further expirations, collecting more and more credit. If you get assigned, you can then sell calls against your shares. It's called the wheel strategy. But yeah, I mean, it's a low priced. Obviously, I did not oversize. I would never oversize on something like this. Like this won't even make up 0.1% of my portfolio, if that, right? But yeah, how do I feel about it now? Again, I do think there's long-term potential. I don't think there's really any reason for it to rally in the short term, minus the passage of the infrastructure bill. Hopefully that answered your question. And thank you, Mark G, for the donation to the St. Jude's Children's Hospital. How much does the 450 put pay per month? Feed Your Head says, well, obviously it depends on which expiration you're talking about, right? The further you go out, the more money you're going to get because the more risk you are taking. So go to any expiration date that you like, use whatever options platform you want, and you could tell the price. If you can't do that, then you probably shouldn't be selling a put in the first place. I'll be honest, you should probably paper trade until you can at least get the basics down. But you should be able to go to any expiration you want, look at the 450 put on Tesla, and see what it's paying you. I have so much to learn about options. Still, easiest way for me to learn options for free. Come on, Jay the Bull. You have the whole internet at your disposal, dude. What the hell? What the hell? Right? Like back when I was learning options, we didn't have that. Like you actually had to specifically look to an options resource in order to learn. You have YouTube. I mean, look, if with all of the free resources at your disposal, if you're still not willing to learn, then you probably shouldn't be doing something complex anyway, right? Like trading options or something complex where you can lose a lot of money. I mean, come on, fam. Like at the end of the day, put in the work. At the end no matter what resource you use, whether it's the options course that I did, whether it's YouTube, whether it's Google, you need to practice, right? If you don't practice, you're not going to be able to trade options. So it's not so much, where to find the info. It's, are you willing to put in the work? Ant-Man donated $5. Thank you again, Ant-Man. Thank you so much. Let's see. Did I miss a question? All right. Yes. Can you talk about selling a put and impact on buying power or maintenance margin? Okay. This is a good question. So if you don't have a margin account, right, and you sold a cash secure put. So say that, let's just talk about, I don't know, let's talk about here. We have Proterra up, right? It's trading at $10, okay? If you sold a cash secure put at the $10 strike, then you will need, and you don't have a margin account, you're going to need the funds available or the cash available in your account to buy 100 shares of Proterra at $10. Okay, so what is that? $1,000. So Thinkorswim is going to say, hey, do you have $1,000 in your account? Yes. If you do, they're going to hold that entire amount, which is the effect on your buying power, in order to sell that cash secure put, and it will not be released until either the put expires or you buy it back and close out your position. Okay. If you have a margin account, then depending on your account itself, how much money you have in there, and also depending on the stock, because each stock will also have a different maintenance margin depending on how risky it is, then usually you can get away with selling a cash secure put and the platform only requiring 50% or 40% of the margin of the cash up front because you have a margin account. This is why, in my view, especially if you have a larger bankroll and you have the risk tolerance, this is why, in my view, having a margin account is superior, because you can actually sell puts on margin and use your actual cash to buy positions in long-term positions in companies, because the Thinkorswim or the platform is not requiring that you put aside all of the money required to buy a put. So say, for instance, that you have a margin account, again, and you sold a $10 cash secure put on Proterra, then instead of holding $1,000, Thinkorswim might only hold $500, and the other $500, because you have a margin account, will be held on margin. So then you can use the remaining of the remaining 500 of your cash to actually invest in a long-term lucrative position, right? So that's why I in my view, having a margin account, especially if you have the experience and the risk tolerance when it comes to selling cash secured puts, is superior, because you don't have to have the entire amount of cash to buy 100 shares of that stock. You will likely only need 50% or 40%. Again, this depends on your account itself, what your maintenance margin is on your account, as well as the stock that you are selling a cash secured put on. It differs between stocks. So selling a cash secured put on Apple, for instance, will likely require less cash than selling a cash secured put on something risky like Nikola, right? So hopefully that answers your question, and thank you for the donation. All right. You missed a couple donations above those. Alejandro says, okay, let me look. Anonymous, thank you so much for the donation. Yes, I mean, but that's anonymous, so I wouldn't know who donated. Doug. All right, thank you, Doug. Let me see if you left a question. I wish they would just put back the super chat and then, donate the super chats to St. Jude's as well, but they removed super chat in lieu of just having one donate button. All right, Doug says, Lucid, please, for the long haul. I've talked about Lucid before. I do think that there's a lot of hype around the stock. However, I think when Lucid was first announced, there was this impulse to compare it to Tesla for some reason, right? And in my view, Lucid is not Tesla. Lucid is probably closer to Fisker, just based on its ability to scale, and based on its market, and based on its the volume of cars that it's going to sell. I don't think it's anywhere near a Tesla. And I think that folks got into Lucid during the EV hype craze, which really wasn't that long ago. It was just earlier in the year. But they got into Lucid thinking that, hey, I missed out on Tesla. Tesla went from, whatever it was, $200 to pre-split, what was it, $1,500, expecting that they'll see a similar run-up. And that's just not the case, right? So really, in my view, Lucid is closer to Fisker, where you will see these spikes depending on, bouts of good news or hype, or, short squeezes or Wall Street bets mentions, but, isn't really, in my view, I'm personally not a long-term investor in Lucid. I don't mind trading it based on certain factors such as short interest, such as, IV on the options or implied volatility on the options, but I'm not an investor in Lucid because, dude, in my view, Audi, Porsche, BMW, Tesla, I mean, they're able to scale and they're creating far superior products. Like, why would I pay, $100K on a Lucid when I can buy, the base model Porsche Taycan? Like, there's just no reason for me. There's just no reason to do it. Now, I think Fisker actually has a smart business model, because I think that Fisker announced some sort of flexible lease option where you can lease a Fisker with no commitment as to how long the lease is. So like, I can walk into a Fisker dealership and I can actually get a Fisker for a couple months and then just return it, no questions asked. I think that is very smart. And you're going to need some creative lease options or purchase options if you want to compete with the big dogs, right? Like, there's no way I'm buying a Lucid if I can buy an Audi e-tron or a BMW, whatever the i8, the all-electric i8 version that's coming out, right? Or the Porsche Taycan, or a Model S, a base Model S. Like, why would I buy a Lucid? Especially when, they're touting their software as being a selling point, and Tesla's software is already 10 years ahead of everyone in the game. So I'm not a believer in Lucid, but yeah, sure, I don't mind trading it for cash in the short term if there are certain market conditions that I see that would pose a lucrative short-term trade, if that makes sense. Omar, hey Z, please add the butterfly strategy to your options course. All right. If you're interested in that, then sure. I don't mind doing that. Anonymous donated $20. Thank you so much. I can't read this name in Russian, sorry, but he says, Z, you are the best with your options course. Appreciate it. I put a lot of hours into it. Obviously, again, you can always learn to trade options for free, but thank you so much. Baba prediction according to latest news. Tell me what the latest news is. How do you sell cash covered puts on Webull? Literally go to the put that you want and click the sell button. That's it. Shell, welcome. Hey, Shell, thank you for being a channel member. Thank you so much. Oh, and by the way, if you click that little join button, and full disclosure, the join button has nothing to do with the charity campaign to St. Jude's. The join button, you basically join the channel, but I do send out my watch list every week to the channel members, right? So I try to give back to those who support the channel. So that's what the join button is. Hey, my brother, just to piggyback on the question, is it time to buy major bank stocks on weakness? On weakness, yes. On weakness, yes. All right, let's see. Did I miss any donations? Hey, Caleb, what's going on, man? What's going on, bro? Caleb, thank you so much for the donation. That's awesome. That's awesome. Jube, sorry if I mispronounced your name. Thank you so much for the donation as well. What do you think about OLO? Are you talking about this? Is it obviously just because it ran up? I don't know much about this. But if you are looking to buy here, I would say in general, you are chasing, and I don't chase. So, and if you are in this, I would, probably think about when to start taking profits. But I don't know much about the company. What is it? Let's see. Seeking Alpha. OLO partners with Grubhub to streamline digital and delivery orders. Yeah, but what is the company? OLO provides software as a service platform for multi-location restaurants in the U.S. The company's platform enables on-demand e-commerce operations which cover digital ordering and delivery through online, blah, blah, blah. Its modules include ordering and on-demand e-commerce solution that enables consumers to order directly from and pay. Okay. Yeah, I think that probably it is rallying due to the news that it partnered with Grubhub. It recently beat I guess it beat on revenue and beats its earnings per share. It came in profitable this quarter. I can't say that. Let's see if we can get any metrics on its value or see any of its financials. Let's look at its growth. Yeah, I guess, based on its recent growth year on year and the fact that it beat earnings and the fact that it partnered with Grubhub, you are seeing that run up. I'm not sure if that run up also includes some sort of, where did I put it? Yeah, if that run up includes some sort of short squeeze or whatnot, I don't know. But this is very thinly traded volume here. I would not chase this, I'll be honest. So, and if you're in this, I would look to probably start trimming. Hopefully that answers your question. All right. Let me look. Wait, how did you just super chat? Maybe the super chat button is on. I don't know, man. Like, I'm confused about the whole donate super chat thing. But if the super chat button is on, okay, I will have to revisit this. But that's crazy how you just super chatted, because this doesn't look like a donation like the other people were giving. All right, you always say stock market is the only sale where people don't line up. Does buying puts today kind of the same thing after insane market run up? No, that has nothing to do with it. That saying means that, if you see, for instance, Amazon, everyone, that's not the right Amazon. when people look at these blue chip stocks, everyone says, oh man, I can't wait for it to drop so that I can buy. And then it drops and then nobody buys, right? That's what it means that the stock market is the only sale in town where nobody shows up, is because especially when blue chip stocks tank, fear starts to get in and people are like, oh, am I buying the bottom? Am I buying the bottom? So they kind of get obsessed with, oh, if I buy and it drops, I'm going to cry or I'm going to be pissed. And so they don't buy, then the stock runs up again. And then once it starts running up, they start buying, right? They FOMO into it. So it just means that, basically fear takes over, and, the discount that people thought they were going to buy, when the thing is actually discounted, they don't buy, right? So like I said before, if Amazon is giving you a 16% discount, then, you really, and you don't buy, you are really, shooting yourself in the foot, in my view, right? Or anything for that matter, whether it's Apple or Home Depot or Chipotle or whatever, a stock that you have high conviction on, when it tanks, fear kicks in, especially if you're a new trader and you don't buy it, right? That's what it means when, that saying that the stock market is the only sale in town where people don't line up. I have no idea how you're trying to correlate that to buying puts. No. And does buying puts after an insane market run up? Like, dude, look at the S&P, right? Tell me, please, at what point, this is the S&P going all the way back to November. At what point were you going to buy puts and be profitable, right? Now, unless you are a day trader, you're looking at the 1 hour chart, you're looking at the VWAP, you're looking at support and resistance, you're looking at, and I have a whole video, by the way, on how I day trade SPY options, right? Just search on YouTube, the Traveling Trader Day Trading, and you'll see it. But unless you're a day trader and you're looking at the 1 hour chart or you're looking at the 5-minute chart, and you can, basically plot these moves and you're buying puts and calls on the rallies and the drops, yes. But if you're just saying, oh, the market is run too hot, I'm going to buy puts. Dude, at what point were you going to buy puts and make money? Look, the market is just a straight line up. That's why it's so funny to me on a day-to-day when you get these red candles and people are like, oh my God, my portfolio is down. Why is Biden doing this? Or why is Jay Powell doing this? Or why is the market rigged against me? I'm like, dude, like zoom out, right? Zoom out. Look, this right here is the coronavirus crash, March 2020. What has the market done since then besides only go up? This is the weekly chart, right? So no, you don't just buy puts because the market ran up. The market can continue to run up and literally steal money right out of your pocket. You buy puts if there's a reason to buy puts, or if you are hedging, right? If you say, hey, my portfolio is running super good right now. Most of my portfolio is made up of quality stocks in the S&P or quality stocks in the NASDAQ or both. I'm going to buy what's called protective puts, and I'm doing it for a calculated and small percentage of my portfolio. Yes, that is perfectly fine. I do that all the time. I hedge all the time. Whether you're buying the VIX, buying protective puts, selling calls against your shares, etc. But if you're just like, oh, the market ran up, I'm going to buy puts. No, that's not how it works. And sorry, I'm not belittling you. I get emphatic when I talk about the markets. All right. Caleb, keep it up, brother. Love the donations. Thank you, Caleb. Bruno Valente, Tesla put is the 450, adjust expiry accordingly. Yes. And, again, back to the Tesla puts, you are better off doing it when the price of the stock drops. So yes, you could certainly sell the 450 put now, but if Tesla drops, then you could sell it for a higher amount. So again, do according to your risk tolerance. Quantum computing, next big category. Yes, but think about this. Remember, Ida Perez O'Gorman says, quantum computing, next big category. Think about this. During the California gold rush, right, in the 1800s, who made the most money during the California gold rush, right? Was it the people that found the gold? No, it was the people that were selling the shovels, right? So think of quantum computing. Yes, it is the next big category, but who is going to be making the most money in quantum computing? Likely the semiconductor and chip companies. Okay, so that's where you want to look, in my view. And again, I said this before, but the semiconductor industry is set to double in revenue within the next 10 years. Okay, so think about that. Z, you are very welcome in Australia. I will make it out there soon, as soon as you know, the very stringent and authoritarian lockdown rules start to lift. I will make it there. It will be an interesting experience for you from Russian family showing you a Russian family in Western Australia. That sounds like a lot of fun, by the way. I will definitely take you up on that offer. Drizzy says shovels. Yes, exactly. Omar, what do you think of UPST puts? What about them? Like buying them, selling them? Guys, be more specific in your questions. I assume you mean buying them. You know what? Actually, this might be a good trade here. Here's the reason. I will look at this certainly after I get off the live stream. But look at this volume here. This is very dangerous, right? So when you have a price run up with declining volume, especially when something is overbought like this, also there is bearish divergence, right, between the price and the volume, as I showed, also between the price and the MFI, also between the price and the RSI. This is called bearish divergence, right? When the price is going up, but these indicators are going down. I don't mind this, actually. You know, I will want to see what the implied volatility on UPST is, because if the implied volatility is high, then you can, as a matter of fact, sell spreads for a good amount. Let's see what the implied volatility is here. So the implied volatility, let's see if we scroll down to the bottom and get the option stats. It's not giving me, you know, it's saying that the general implied volatility is 76, but it's not giving me the IV percentile, likely because these options they're not heavily traded. You could see today that the volume, there's only been 6,000 calls and 6,000 puts open. So there's not enough data to generate an IV percentile. However, that does not mean that you cannot trade them, these options. But, you know, thinly traded options pose a higher risk, because if the trade goes against you, it's a lot harder to close if there's nobody buying and selling these options. So just keep that in mind, okay? Keep that in mind. Let's see. GM told Amazon. Oh, wow. I didn't close my workday position. Oh, actually, you know what? Yeah, I guess I didn't close it. Damn it. That's what happens on the live stream. All right. Let me get to your questions. Alejandro, $5. I'm down 25% on a SoFi in the money $10 leap, expires 122. Would you cut your losses? It's 10% of my portfolio. Dude, why? Why is SoFi 10% of your portfolio? Why? That should not be the case. Yes, you've been selling weekly calls, but it's less than a loss. And the reason is you're not making a lot of money on those calls, on selling those calls, is because SoFi hasn't had a run up in price, right? But yeah, guys, thank you for the super chats, you know, but you know, I would rather use the donate button if you could. Anyway, I talked about SoFi in detail just a few minutes ago. I don't like SoFi here. I want SoFi to prove to me and prove to the market that it has the ability to generate, that it has the ability to actually generate a profit in the future. And until it does that, SoFi is likely going to remain in this range and could even drop. So, and the fact that it's 10% of your portfolio, nah, man, that's not the way. That's not the way. Yeah, I mean, do what's good for you, but you know, I would much rather sell puts than buy a leap. So consider that. You know, if you do close it and you still, for some reason, want SoFi, you could sell a put on SoFi as opposed to buying a leap. Rishi donated $5. Thank you, Rishi. What do you think of MA call spread? October 15, 385, 390. Okay. MA. Not too hype on that trade, honestly. Not too hype on that trade. I mean, I think you could pick lower strikes and potentially have a better trade. You know, MasterCard looks like it is finding support here. This support goes all the way back to February. So I don't mind an entry into MasterCard, but I don't like those strikes. Now, you are probably likely getting that call spread for very cheap, which is the reason that you are looking to enter those strikes. But, you know, I think you can find lower strikes, maybe 360, 365. Like, why not do that? You know what I mean? Give yourself a better chance to win, as opposed to trying to lotto the spread, meaning use it as a lottery ticket. So, yeah, I mean, I don't mind it so much because it's probably very cheap. But if you really want to win on the trade, I would go lower in my strikes, honestly. Thank you for the donation, by the way. And by the way, guys, if you're just joining and you're wondering what the Fed said, I can break it down for you really quick. Not looking at raising rates because inflation is transitory. The real inflation rate is still around 2% and not 4% that's reported, because the inflation is really isolated to just a small range of products. And two, they are going to taper or look at slowly tapering by end of the year, but they did not provide any sort of solid date. Drizzy, thank you so much for the donation, man. Thoughts on Neuro. Guys, please, no thoughts, questions, okay? Ask a more specific question. I don't know if you're talking about the chart, the company, options, etc. Please. Thank you for the donation, but please ask a more specific question as opposed to just thoughts. I mean, this looks like a good technical setup here. If you are looking to swing trade, again, I don't know if you're talking about the company or the chart itself, you know, but I would definitely set a stop limit right below the 21 EMA, like around $11.40. I would not go heavy on this. You are seeing a lot of volume coming in today. That may continue tomorrow, or not tomorrow, but on Monday, even though Monday tends to be a momentum killer. So I wouldn't really bank on the momentum continuing on Monday. It certainly could, but to me, it's not a lucrative trade or a lucrative strategy to try to trade Friday's momentum on a Monday, because, you know, by the time the weekend rolls around, momentum automatically drops. But in terms of a technical setup, sure. I mean, you could enter here. I would set a stop limit right below the 21 EMA. Looks like the MACD is turning positive. You know, I don't know much about the company. We can look it up real quick, but please, guys, ask more specific questions than just thoughts. You know, I mean, it's hard for me to get into something that ran up 50%. But again, I mean, if you look at its history, that isn't really the logic that, you know, that isn't really the logic that it uses. I mean, in July 20th, it went up 207%. The next day it went up, you know, 107%. So just because it went up 50% today doesn't mean that it can't keep going up. It looks like most of these are old reports, actually. Yeah, the last analysis done on it is 2018. So I would ignore these bullish comments here because these are 3 years old. But yeah, I guess this is a pharmaceutical company. It has 20 employees. That's a pretty small pharmaceutical company. Detection, diagnosis, and monitoring of peripheral nerve and spinal cord disorders. You know, if it has something in the works, maybe you are trading an FDA approval or some sort of binary event. But again, I mean, you know, it's a pharma stock with likely a binary event in the works. So watch out. That's all I'm going to say. But this technical setup looks okay. CHPT is 40% of my portfolio. I mean, good job. Like, you know what I'm going to say about that. Thoughts on Seva. Guys, no thoughts, questions, please. QQQ hedge from the Discord. Any reason to roll it? I closed that last week, as I mentioned in the Discord. So I don't have it open. Any reason to roll the hedge? No, I wouldn't roll it because the strikes, I believe, were 370, 369, somewhere around there, right? And the QQQ, as I said in my video from yesterday, the market is going to continue to melt up. The Afghanistan events, unfortunately, are going to be forgotten by the market really quickly because we've been in Afghanistan for 20 years. So what is another operation in Afghanistan? Do you know what I mean? And if the Fed was dovish, which they were today, they didn't commit to tapering or a tapering date. They didn't commit to raising interest rates. Those are conditions for the market to keep going up. Basically, what the Fed is saying is, hey, there's no reason for you to invest in bonds. Don't look there. Look over here. Here being the stock market and the economy, right? Mark G donated $5. Thanks again, Mark. Let's see if I can get your question if you asked another question. Blah, 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 blah. Man, I really wish they would just combine the donate and the super chat button. It'd make it so much easier, man. Because that way I could see your question right with the donation, right? But it's unfortunate that you can't ask a question while donating. Jenny does it. Donated $20. Thank you so much, Jenny. Thank you so much. Okay, so you have a question. Excuse me. Sorry. Do you have separate accounts for the different types of trade? Yes. So the cool thing about major brokerages, okay, and for some reason Robinhood won't let you do this because they suck. But the good thing about major brokerages like Fidelity or TD Ameritrade or Charles Schwab is that you can create as many accounts as you want, right? So you have like a parent account, which is, Jenny does it. And then you'll have a bunch of sub accounts. And those sub accounts you can use for different, you can have different functions for them. So I have a long-term account that I don't touch, okay? I only add to it. And I add to it, usually I try to take profits from the options, right? The weekly options income that I generate. I try to take those profits and throw it into the long-term account, okay? But I don't generally mix up short-term and long-term trades in one account because what I found, and over the years, you learn this the hard way, but what I find is that when you're looking at your position statement, okay, if you are doing short-term trades and long-term trades on the same account, then you are likely to get influenced. Jesus Christ, that was loud. You guys didn't hear that, but but you are likely to get influenced on your long-term trades by your short-term trades. So what I mean by that is, you're doing short-term trades, you're going in and out or whatever, and you're also doing options, right? If you have a long-term position, say you bought AMD and AMD dropped since the time that you bought it, then you are likely to look at AMD and be like, oh man, I don't like this anymore. I'm going to sell it, right? And you're going to get influenced by that short-term mindset because we're apes at the end of the day, right? It's very hard to look at one thing in front of you and separate your mindset. Say, oh no, this one is long-term. Oh no, this one is short-term. If you're making short-term trades all day long or all week long, then at some point you're going to look at your long-term positions. You're like, oh man, I'm down 8% on Nvidia. I'm down 12% on Microsoft. All right, you know what? Let me get rid of those too. And that's not the way, okay? So you definitely, and especially for tax purposes, right? I talk about this all the time, but your tax burden is doubled when you are short-term trading. So if you bought Microsoft today and you sold it in 6 months, then any money you make, you are going to be taxed double on that, okay? As opposed to holding Microsoft for a year, then you are taxed at a much less capital gains rate if you then sell it, okay? And you are not taxed at all if you just keep holding it because you're not taxed until you sell. So keep that in mind. But that's a good question. I definitely separate them. If you are not trading on Robinhood and you have one of the big boy or big girl platforms, then for sure, consider opening up separate accounts just so that your mindset is adjusted each time you look at it, right? When you look at your long-term account, you're like, oh, okay, I know this is long-term. I'm going to take a peek at it. Okay, maybe I won't look at it for another month. And you just set it aside. And then your short-term account is the account that you sort of have fun in. Do you sell credit spread on high IV? Yes. I mean, in general, you want to sell credit spread on high IV. And the fact that you're selling a spread, you already know what your max risk is up front, because the max value of the spread is the width and the strikes. So like if you sell 100, say you have a $95 100 spread, right? The max value of that spread is $5. That's the most you can ever lose. So you know that right up front. Would you sell puts on Seva today? Yeah. I mean, only if you don't mind getting assigned on Seva, okay? Only if you don't mind getting assigned on Seva. But if you do, then no. Sell a put spread. Don't sell a put. Hazy, check out SPLK. Great play right now. Broke out of the inverse head and shoulders. Let me know your thoughts. Splunk is one that I don't mind, especially in the cloud cybersecurity era. Yes, this is a inverse head and shoulders. No, it did not break out. You are actually quite mistaken on that, my friend. I can just look at it and tell you that it didn't break out, but I can also draw it for you. You can see it here, right? Here's the left shoulder. Here's the head. And here is the right shoulder. So if you actually adjust the neckline based on where this neckline was, whoops, you cannot comfortably call this a breakout. Here. Right? So, yeah, it's slightly poking out, but I would not comfortably call this a breakout. However, if you really wanted to trade it, sure, you could. But, it recently, I think Splunk still suffers from the fact that it cannot be consistently profitable. Now, it says here, according to TradingView, that, it did come in at a surprise of positive earnings when it was expected to be negative. So, maybe you could see a delayed reaction, a delayed catalyst here, and Splunk could go up. It looks like there would be resistance at like the 173, 175 range. But yeah, I don't mind a trade here, but this isn't really a confirmed breakout. All right, let me get back to your question. See if I missed any donations. Let's see. Semester, blah, blah, blah. Okay. Did I miss any donations? Clear Haze donated. Thank you so much, Clear Haze, for your donation. What's up, Lena? Explanations like that you just did are worth clipping. You do that a lot, and it's great for short YouTube clips. You know what? I got to get on the YouTube short game. We'll talk about that later, Caleb. We'll talk about that later. All right. Did I miss? No, I don't think I missed a question by Clear Haze. Visa calls look great. Yes, I like Visa and MasterCard here. All right, let me go back up. Jenny says that is exactly what is happening to me. Oh, you're talking about the separate accounts? Yeah. I mean, and it takes 2 seconds to create a separate account, honestly. Just call up TD or Charles Schwab or whatever. They'll run you through the application process, but it's very easy, and you can create as many as you like. Chris Serenios donated 25. What is this? What currency is that? But thank you so much for the donation. Let me see if you left a question. Man, they are really messing up the UI here. They should just allow you guys to put questions in with the donation. All right, there's your question. Could you check the FANG's index chart, FNG1, exclamation mark ticker? Do you see a possibility of a pullback here? Been stuck at range highs and its large percentage of NASDAQ market cap out. And it's been stuck at range highs and its large percentage of NASDAQ market cap. Outlined, maybe? What do you mean by outlined? All right, let's check it out. FNG. Where is this? Are you talking about? Oh, this one, right? It's a futures index, right? I hope you're talking about this one. Hold on. Or is it a CFD? This is it. I think this is the one you're talking about. Yeah, it's a futures index. Okay. I mean, if you're trading futures, be careful. You want to look up, I mean, you probably already know this if you're asking me about this, but you want to look up what the tick values are, meaning for every cent or 10 cents, it depends on the futures. Each one has a different increment. That represents a dollar value. So some futures, for instance, the Bitcoin futures are mad expensive. I think for every 5 cent tick, that represents $25 in value. So it takes up a lot of buying power, and you can lose your ass really quickly if the trade goes against you. So keep that in mind. But yeah, I mean, this looks like it's at resistance. Not sure what you're asking here. Like, would I buy this? Probably not, especially the fact that it's futures. I mean, I think I think there is a much less costly way of exposing yourself to FANG stocks, right? Like, again, the QQQ is probably the best and cheapest way of exposing yourself to those things, right? But yeah, I do think that it looks like it's at resistance. I would have a very hard time buying a futures contract, a bullish futures contract on that ticker. So hopefully that answers your question. So Splunk calls upon confirmation. I don't know, man. Like, if you want to trade Splunk calls, sure. Again, I'm not a big fan of buying calls. It's just, if you feel like gambling, sure. But, most of my options trades will be in the form of a spread, or I like to sell options. I don't typically buy options unless I'm YOLOing or gambling or I'm feeling freaky that day. Like, it's not a part of for me, a regular income stream. Mark G donated again. Thank you, Mark. If I sell the Tesla 710 September 22nd put for $14,545 and got assigned next week, wouldn't this be a good strategy? I mean, yes. Okay. So it depends on what do you mean by it. No, it's not a stupid question, Mark. So it really depends on what do you mean by good strategy. Like, I'm not sitting in your living room, right? Like, I don't know you. So I don't know what your conviction is on Tesla, and I don't know what you want to do with those shares. So if you got assigned, right? Calculator. So if you got assigned, you would essentially be paying, if that's really what you're selling that put for and you got assigned, is it really $145? 145. I'll have to look at that. I don't know. Oh, I guess you are selling the 710. Yeah, exactly. So you would be paying per share $564. Is that right? Let me see this. That can't be right. Tesla. You said September what? September 22nd. There is no September 22nd. I don't know what you're looking at, bro. There is no September 22nd. Maybe you're talking about September 24th. Okay. Maybe that was a misprint. So let's go to September 24th. If you sold the 710 put, no, dude, you're not getting back 145. Are you talking about September 2022? Maybe that's what you're talking about. Okay, you must be talking about September 2022. Okay. Yes. Okay, that is what you're talking about. My bad. Yeah, if you got assigned, then essentially this would be your cost basis. There's only one problem here, bro. You cannot force the platform to assign you, and you will likely not get assigned until closer to expiration. So keep in mind that you will be holding, or the platform will be holding, that much cash from you, right? That basically, if you don't have a margin account, they're going to hold the cash necessary to buy 100 shares of Tesla as 710. So what is that? $71,000? Now, again, I don't know you. $71,000 could be toilet paper to you, but you can't force the exchange to assign you. So they will likely be holding your $71,000, like your pimp until until you get closer to 2022 or September 2022. But yes, theoretically, if you got a sign next week, then you essentially would be paying $564 for 100 shares of Tesla. But again, you will likely not get a sign. So keep in mind, if you are okay holding this for a year or close to a year, then yeah, sure, go ahead and do it. But you will have your funds held. Now, if you have a margin account, again, they will likely only require 50% or 40% upfront. Okay, so keep that in mind. Check your buying power. It will tell you when you try to sell the put and you try to confirm the order, it will say, buying power minus whatever. That is how much the exchange is going to hold for you selling that put. So based on how much you have in your account, what your margin account looks like, and what the margin requirements are for Tesla, it's going to tell you what it's going to hold. Okay. All right. Clear Haze had a question. Okay. Now I have to go back and find it. Clear Haze. This is all right. Cool. How do you feel about buying in the money leaps on high conviction stocks instead of outright buying the stock? Yeah, I did a whole video on leaps. So go back and watch that. Search the Traveling Trader leaps. But I did a whole leaps video tutorial and why you would pick a high delta. And in that video, I don't even talk about a 0.6 delta. I go over why you should buy a 0.8 delta or close to it and above. Okay. But yes, the reason that you're doing that is because you are essentially getting close to the amount of money that you would get if you bought 100 shares of stock, but you're putting up a lot less money for the leap, right? It's costing you a fraction of what it would cost you to buy 100 shares of stock. So if you have a high conviction, then I don't mind, especially if the stock has low IV. So keep that in mind. Like, don't try to buy leaps on something that's really volatile and has a high IV. If it's generally a low IV stock, and if you have a high conviction, then hopefully we're talking about low IV stocks. Excuse me. Then yes, I don't mind it at all. But don't go overweight. So if that leap represents 20% of your portfolio and the stock that we're talking about is Fubo, then no, you're not going to get my blessing from that, but do what you want. All right. Let's see. Mark G. Yeah, we got to your question. JS, thoughts on SoFi? Please, no more thoughts, questions. And also I talked about SoFi ad nauseum, so go back. Too much coffee is not healthy. Doc, what are you talking about? Who told you? Too much coffee is very healthy. Do you use different RSI settings? No, it's only one RSI settings. Drizzy, I'm loving the CLSK chart. Great technical setup. It looks like looking at calls after some thorough DD though. CLSK. Yeah, I mean, this is one of those that's, unproven, could benefit from the infrastructure bill. I don't mind buying it here. If the IV is low enough, then sure. Yeah, you could buy calls here. Earnings were abysmal, so keep that in mind. It's an unproven company that is, was once part of the hyper growth stock wave of early pandemic YouTube, but sure. Not for me, but sure. Is it better to roll a spread or let it expire with profits? And open another position it depends. Like, what are you rolling it for? If your conviction is still the same on that position, then yeah, keep rolling it. Whether you roll it or whether you close it and open another position, it's pretty much the same thing, honestly. Now, if you do close it and open another position, you have a little bit more leeway because you can pick new strikes if, the stock has moved a bit and you need to adjust your strikes. So, but yeah, leaps are awesome. Yes, it is. If I use margin account money to buy, sell, put, you cannot buy, sell, put. Can you buy, sell a car? No, you can't. You're either buying a put or you're selling a put. Do I need to pay interest for that? Yeah, if you use margin, you need to pay interest. Now, there's a big difference between. Good morning, guys. Good morning, Tamir. What's going on, man? There's a big difference between using a margin account and using margin money, okay? Just because you have a margin account doesn't mean you're using margin. Keep that in mind. But it could mean that you are using the benefits of a margin account. So let's just say you have 100,000 in there in your account, and you only are invested with 20K, you have 80K left, and you sell a cash secure put on something. You're not using margin. You still have 80K of cash in your account, but you will be using the benefits of a margin account, meaning that the exchange is not going to hold the total amount of cash for that cash secure put. All right, Matthew DeVito donated $10. Guys, you guys are blowing me away with these donations. Thank you so much. Thank you so much. And I'm sure the hospital appreciates it even more than I would. So your question, Matthew DeVito, Bud is a part of my long-term portfolio. It seems undervalued right now and good buying opportunity. Has Bud ever been on your radar? Yes, it has been. Mostly for swing trades because the chart looks like this. However, since the pandemic, it generally has followed a general uptrend. It did break that trend during its last earnings. But, on something like this, you could wait for it to come back into your trend line, so above $71. However, if you do have a high investment conviction on the stock, you could actually just dollar cost average into it. However, if you're talking about strictly from a trading perspective, no. Any technician will tell you wait to come back into your trend line because this was a trend line and it broke the trend. So yeah, but if you have a high investment conviction in Bud, sure. I mean, before the pandemic, this thing, was trading in the 73 range anyway. So keep that in mind. And it was declining before the pandemic. So October 2019, it went from $93 all the way down to 77. You want to find out why it did that, why there was this gap down here. And try to uncover where it is fairly valued at. Is it fairly valued in the 70, 75 range where it was trading at before the pandemic? Or is there a reason to believe that it can get back to the 90s? But in terms of a technical setup, I would wait for it to get back into the trend line. All right. Tamir. Hey, man, that's big of you. Thank you so much, Tamir. $50 to the St. Jude Children's Hospital. Anchit, thank you so much for your $10 donation. I will get to both of your questions. Tamir, do you have a question, my man? I'll get to Anchit's first, and then if you have a question, let me know. Looking for selling a covered call on Z. Is there a good time to sell calls? Yes. So a good time to sell calls, or a better time to sell calls, is when you believe there is resistance. Now, it also depends on where you bought the stock at, right? So generally, you don't sell calls for lower than you bought the stock at because that doesn't make sense, right? The reason is because you can get your shares called. So here's an example. Looking at Zillow, okay? Let's just say you bought this at, let's just say that you bought this at 120, 125, okay? Right now it's trading at 99. If you sold the $100 call on Zillow, well, you bought it for 125. So if you sold a $100 call and you get your shares called at 100, then you automatically locked in a loss because you bought it for 125 and you sold the $100 call, if that makes sense. Now, if you bought Zillow all the way back, when it was $50, it's now $99 and you sold a $100 call. Yes, that makes sense. Also, you get more money the higher that the stock price rises because the value of calls are more expensive, so you could sell them for a higher price, if that makes sense. So hopefully that answered your question. Daniel McKenzie, what's up? Welcome to the channel. Thank you for supporting the channel. Are you not long FUBU long term? FUBO long term? FUBU. I just showed my age there, man. You guys probably don't even know what FUBU is. But if you watch Shark Tank, one of the sharks on there, Damon, he made his money on FUBU, which was a clothing brand from the 90s. All right. So FUBO. Oh, because I talked about FUBO earlier. I mean, it's not whether I'm long or not on Fubo. I just said, hopefully it's not 20% of your portfolio. Like, I don't care if you're long anything. I don't care if you're long Nikola. Just, make sure you're not overweight on it, right? Like, you're never going to look. There was what was that movie? Was it Rush Hour or Rush Hour 2 where Chris Tucker said follow the money, right? Or I think he said follow the rich man or whatever. But basically, look at what the rich people are doing, okay? Model yourself after those people first before you start getting too cute and creative with your trades and investments. Do you think that any fund or institution or any big-time investor like Warren Buffett, do you think that they would put 20% of their money on Nikola or Fubo? No. So why are you doing it? You know what I mean? Like, most funds actually don't put more than 10% in any one stock. And those stocks, we're talking about blue chips, Apple, Amazon, the SPY, the Qs, etc. Why would you go overweight on something like Fubo? So I don't care if you're long on Fubo. It's just, I don't believe in putting 20% of your portfolio on it, or CHPT or NEO or anything else for that matter, right? Like those types of percentages are reserved for, powerhouse companies. All right, let me see if Tamir actually had a question. I might have missed it. Tamir says that's why we follow you, Z. Thank you, man. I always appreciate your input, man. Always appreciate you tuning in too. No questions today. Thank you so much for the donation anyway. Have a great weekend. You have a great weekend too, to you and your family. Always appreciate you joining in. Relly Sunshine says, good morning. Hey, good morning. What's going on? For us, by us. Carlos says, I have a Fubu shirt on. Oh my God. Bufu. Okay, this is a deep cut reference here. I think that was from the Method Man and Redman movie, How High? I think so, right? Bufu. Fubu reminds me of school clothes shopping at TJ Maxx. Hell yeah. That's like, you wanted to get the Nautica and the Tommy Hilfiger, right? From Macy's, but your mom would take your ass to TJ Maxx or Ross and be like, no, you're getting Fubu instead. What was the other one? Quicksilver, Fubu, and Echo. Echo was the other one. Yeah. And Sean John. Fubu was fresh for about 3 years. Damn, dude. I think that's 3 years too long. I think it was fresh for like a year. And then it like literally went straight to TJ Maxx and Ross. Fubu making a comeback. Yeah, they're gonna go public with the SPAC. All right. Matthew says Rockwell. What about LA Gear? Do you guys remember when LA Gear actually had Michael Jackson actually had a deal with LA Gear? I had those Michael Jackson LA Gear shoes. Anyway, Fat Farm. God, you guys are taking it back. Cross colors. This is crazy. You missed my donation question twice. Dushiant says, okay, post it one more time and I will look for your name. Because I don't know that I can search for your name. Dushiant. Sorry if I'm mispronouncing your name. Write it once again, please. Sorry. Copy and paste it. And I will look for it. I promise. I will look for it intently. Bruno Valente. Z, any way you could see if my donation went through? I will look up. But if you did donate, thank you so much. I'll try to scroll up, but this thing is moving so fast. All right. Let me see. Any other questions? Fubu SPAC. Bugle Boys. Bugle Boys was at Burlington Coat Factory. I remember that. All right. Dushiant. I'm looking for your question, man. F-Cell. Okay. There you go. Neo chart. What is this Neo? What is NEO? Are you talking about the crypto? I don't know. All right, let's look at F-Cell. Damn, homeboy sent in like a string of tickers. F-Cell, same as CleanSpark. Unproven, not profitable. Could benefit from the infrastructure bill. If you bought at the high, you will likely never see these prices again, in my view. And if you want to know why, Just look, $6 back to 30 is almost 400%. So you're going to need a miracle just to get back to break, even if you bought here at the high. But yeah, I mean, again, don't go overweight. Nothing remarkable on the chart. This could be a double bottom, could be support. If you have a reason to invest in it, sure, if your conviction is high. I generally would not go overweight on something like this. I think your money is better well spent on something else. But again, I mean, if you're playing the infrastructure bill, sure, you could invest a small amount of money on that. I don't know what this NEO is, but LTCMF. Is that what you put? LTMCF. Okay, I'm dyslexic. Damn, we've been running for an hour and 40 minutes. I'm about to hang it up soon because I got to go back to the Discord and look at our trades. Is this... Oh, this is the lithium stock from Chile? Okay, this is a penny stock. I mean, look, same thing. Don't go overweight. Yes, sure, there's 3 green soldiers here. This is a bullish pattern. If you're not in it already, then I think you missed the bulk of the move because right now it is at resistance. I never buy at resistance. If you are in it, I would look to start trimming, but I would not buy this here. No, not until it broke out. But again, I mean, you're dealing with a lithium penny stock. So, and I don't even know what NEO is. Is it this NEO? NEO Genomics? Maybe? Yeah. I mean, you're looking at those last 2 stocks. You're probably looking at them because they both ran up heavy and they are forming these really bullish green candle patterns. But if you're not in NEO, I would not buy here because, again, you're looking at something that's at resistance. So hopefully that answers your question. All right. LA gear reminds me of the LA lights. Yeah, at this point, I donated 3 times. My question never made it. Usman, post your question again. Instead of saying that, post your question again. Like, obviously I'm not doing it on purpose. There's just no way for me to sift through all this stuff. All right. So post it again and I'll look for it. Just like I looked at Doshians. F-Cell has me wrecked. Well, rotate out of it. Go into something more, more quality. DraftKings, Kathy Wood's doubling down on it. What do you think? I think that we got into DraftKings at a good time. I think that it does have long-term potential, but I think that it made a pretty big move recently. And if you're buying here, ask yourself why you're buying here and not at the 300-day moving average. But we got into DraftKings after it broke out of this symmetrical triangle and it bounced off of the 300-day moving average. Currently up on it. What, 26, 27%? I would not buy here at $60 though. That's called chasing, right? Usman, I'm still looking for your question, bro. So post it. Is that t-shirt from a burger joint? Bruno. Okay, just because I know you and I know that you're not from the West Coast, I'm going to give you a pass, all right? But yes, if you are anywhere near the West Coast and you don't know what In-N-Out is, they need to revoke your license and send you, to the East Coast or the Midwest or somewhere. But yeah, In-N-Out is a burger joint on the West Coast. All right. 74 more and we raised 1,500. Yeah, guys, amazing. Thank you so much, Tamir, for the motivation. Vanessa says, I'm dying over FUBU. Yes. I'm sure I'm going to hear thoughts about it on the Discord later. Usman, I'm still looking for your question, man. I don't want to miss it. Okay. You did miss my donation question 3 times already. Yes, dude, I know this. Post the damn question so I can answer it before I go. Hurry up. Post it. Stop saying that I missed it without posting the damn question. Let's see. Dude, it's lunchtime. I'm in the East. Stop saying it. Well, you guys do have what? Shake Shack, or you can go to White Castle. White Castle is, yeah, Castle of White. White Castle is like the low budget Shake Shack. All right. In-N-Out slander will not be tolerated. Exactly. Tell him, Drizzy. Tell him. Usman, where's your damn question? Nicole Harris. East Coast has In-N-Out. Where? Nicole, where on the East Coast do they have In-N-Out? Let's see. NFL season starting. Blah, blah, blah. All right, guys. I think I'm going to wrap it up. We've been going on for like an hour and 45 minutes. I shot both Fat Farm and Fubu campaigns in the 90s. Thanks for the IG follow. Hey, Jerry. I mean, okay. I should address this now. Well, for one, good job on Fat Farm and Fubu. However, if you're saying that I followed you on IG, guys, please pay attention to the handle, the IG handle, right? I made a post about this. I only have one IG account, and it's the one that's in the description. There are no underscores, okay? And I did post, like my last post on IG was about fake IG accounts. There are fake IG accounts. There's like, right now there's hundreds of them. I don't know how many, but it seems like there's a new one every day. And they literally have copied or cloned my page, and they're following you guys, and they're literally trying to extort money out of followers, right? So if you're saying that I followed you or I messaged you or whatever, that is highly unlikely. So please look at the IG profile name and make sure that it is me. If it has any sort of underscores, it is not me. If there's not a post about fake IG accounts, it is not me. If it does not match the IG profile that's in the description, it is not me. So look at it, okay? Please make sure you pay attention to it. Usman, I'm trying to get to your question, bro. Post it. Okay. I did. My question is, would you recommend adding puts on Nvidia? Okay. Dude, adding puts. Are you talking about selling puts? Are you talking about buying puts? I'm just going to assume that you mean buying puts because you talked about Nvidia's uptrend, okay? No, again, buying puts just because something has run up does not mean shit. It does not mean anything, right? Something can keep running up forever, especially, if something split like Nvidia did, especially if it continues to double revenue, earnings after earnings. I would not buy puts just because something ran up. Now, if you own Nvidia, you can sell calls. Much more lucrative strategy, right? Because you actually own the shares and you would sell them for profit. But trying to short Nvidia, not really. Especially if the Fed is dovish on interest rates and tapering, and NASDAQ stocks and mega cap tech stocks are going to continue to melt up. I generally wouldn't do this. I actually got burned on, even though I own a large amount of Nike, and I'm happy that Nike has run up the way it has. I actually got burned on Nike puts, a couple times. So just because something has run up does not mean you should buy puts on it. There are much more lucrative trades than trying to short a mega cap tech stock that is, that is continuing to murder earnings. Okay. Thank you for posting Usman's question. I just answered it. What should I day trade today, guys? I need a YOLO. Well, look at the YOLO trades on the Discord. There's a whole degenerate section on the Discord where members actually post their YOLO trade. So look at that. I would pull up the Discord, but I don't have it open right now because it kills my CPU. Nvidia is a semiconductor pony. Queen Pelosi bought calls just before it popped. Yes. What delta do you look at when you sell covered calls? I don't look at delta when you sell covered calls. I don't look at delta when I sell cash secured puts. Tesfa Tate asks, what you look for when you sell covered calls is a price that you're willing to let go of your shares at. That's it, right? You're not looking at delta, because if you get your shares called away, you want to make sure that you get your shares called away at a price that you are willing to let go of your shares. And when you sell cash secured puts, you are selling puts at a price that you're willing to buy the stock at. That is why I don't look at delta. You look at the strike price on that, right? I look at delta when I'm trading spreads because I want to know what is the probability that something will or won't happen, and delta tells you that. What is dovish? Dovish means when they are dovish, meaning, hawkish means when you're being aggressive. Dovish is when you're being timid, right? So if the Fed, in referring to the Fed's policy, if they're dovish, meaning that they're not being aggressive with raising rates or they're not being aggressive with tapering. Okay, Oscar, but I can't see the different channels in the Discord. Did you sign up? If you didn't sign up for the trading group, you won't be able to see the different channels in the Discord. So make sure you hit one of the mods up or hit me up. Degenerate section, I'm freaking dead. Yes, there's a degenerate section on the Discord. It's literally called Degen Member Trades. What do you prefer, stocks or spreads? Apples and oranges, man. I have a stock portfolio and I have an options account. So checkers is better than in and out. Bruno, don't start with me, bro. Come on. You must have, sort of a masochistic tendency or suicidal tendency, because that is not okay, bro. In Cali, checkers is rallies. Are you rally? That's what he's talking about? I did not even know that checkers was rallies. Bruno, fuck off, bro. Rallies is better than in and out. Nobody goes to rallies here. Like, literally, when you go to rallies, like, you're going to rallies just to get robbed, right? Like, if you're sitting in the drive-thru at rallies, you're there just to get robbed, or literally to that's where people buy illicit substances. All right. Rallies is cheap shit. Yes. Yo, I'm going to bust out my Coca-Cola shirt soon. All right. Bust it out. Fat Burger is better than In-N-Out. Okay. If you're making a case that Fat Burger is better than In-N-Out, fine. Okay. Fat Burger is made to order. It's clean. I also like Fat Burger. I actually think their turkey burgers are really damn good. I won't get on you for that, but rallies or checkers, come on, son. Come on. Shake Shack better than In-N-Out. I mean, it's not, but I won't hold it against you. Shake Shack is literally the saltiest burger I've ever seen. Relly says, Z is right. No one goes to rallies here in LA. Yes, you're right. There's a rallies on Relly. I don't know where in LA you're at, but there's a rallies on near like Venice and Overland. And there's literally like 3 In-N-Outs close by. I don't even know why you go to rallies. But that rallies that's on Venice and Overland, I swear to God, like if you are ever in the drive-thru for whatever reason, you are looking to get robbed. Don't waste our time discussing fast food. Dog, chill. All right? I've been talking for literally 2 hours about the markets. If people have a little bit of fun, don't come in and rain on don't be the anti-fun. All right? You are literally the robber of joy right now. I gotta have it. You are literally the robber of joy. We've been talking about the markets for 2 hours. Chill the fuck out. Five Guys, my dude and I live in LA. Yeah, there's a Five Guys here. All right, guys. I think I'm going to I live on Venice and Crenshaw. I used to live very close to there, by the way. I used to live very close to there. I used to live on Exposition. All right. No fun allowed. Fun police. Yeah. All right, guys. I'm going to hang it up. I've been going for 2 hours, and I need to get back to trades. But thank you guys so much for the donation. So far, almost 1,500 raised. I'm humbled. Thank you guys for this. Hopefully, you got something out of this. Hopefully, Papa Powell came through. Dovish Fed policy, kept the markets going. He said, keep the party going. Yeah. But thank you guys for joining. Thank you guys for the donations. I love you guys. And I will see you guys on the next one. We will keep doing these. So far we did Monday, Wednesday, Friday. Hopefully I can keep up that consistency for you. Did I do Monday, Wednesday, Friday? Yeah, I think I did. Monday, Wednesday, Friday. And then Sunday, Tuesday, Thursday, I did regular videos. So let's see if we can keep that up. But thank you guys for the donations. You guys are awesome.